So I've sent the question we'll be solving tonight to the group. Anybody, any willing person should please help us do the reading. Question number 1, November 2018. And just like I keep saying, most questions you see in group, they are not lengthy questions. They are simple questions. You just need to check the additional information to know what's the length of it, and that's all. So, a willing person, please go ahead. A willing person should unmute himself and go ahead with the question.
Okay, sir.
Thank you so much.
Question number 1. Requirement. Prepare the consolidated statement of financial position of MIE PLC Group as of December 31, 2018. So let me read the question. A non-current asset or a disposal group must be classified as held for sale at the date the operation meets the criterion to be classified as held for sale. Required. Discuss the criteria to be met before an asset or disposal group is classified as held for sale. B. Question 1.
First up there, 1A. Which standard is the examiner testing there? Which standard?
IFRS 5.
IFRS 5. So what are the criteria that needs to be met before an asset is classified as held for sale?
It must be available for immediate sales.
Okay.
It is present condition, and it must be probable.
All right, so it must be available for sale, and it must be probable. The sale is highly probable. It's highly probable that it will be sold. I would say a sale is highly probable if some factors are met, some conditions are met. What are those conditions?
Management must be committed to a plan to sell the assets. There must be an active plan to locate the buyer.
Okay.
There must be a willing buyer.
Yeah, there must be a reasonable buyer, okay.
Yeah.
The expectation is that the sale must be completed within 12 months. Are we together? I think the price also must be reasonable enough to attract the buyer, okay? Are we together?
Yes, sir.
And when an asset is classified as, or when it is classified as held for sale, what's the accounting treatment?
Depreciation and amortization.
It should no longer be depreciated.
Okay.
Then it should be on a separate line item in the SOFP.
Yeah. It should be classified as a separate line item. That's wonderful. So it is taken out immediately out of the asset group, and it is reclassified at under the disposal group. That's nice, because we'll test that knowledge. Okay, that knowledge will be applied in what we are going to solve. All right. Now let's go ahead with the big question. I think Amru was the one doing the reading. Please go ahead.
Okay, sir. MIE PLC is a Nigerian company which operates in a service sector of the economy. MIE PLC has a business combination relationship with Bidun PLC and Yedun PLC. It is the policy of MIE Group to recognize the non-controlling interest at fair value at the date of acquisition. The following are the draft statement of financial position as at December 31, 2018. Additional information. Number 1, on January 2nd, 2016, MIA PLC acquired 70% of the equity share capital of Bidun PLC, when the retained earnings of Bidun PLC were 638 million naira, and other reserves were 54 million naira. At acquisition, the fair value of the non-controlling interest of Bidun PLC was 590 million naira, and the fair value of the identifiable net asset acquired was 1,670 million. The excess fair value was as a result of a non-depreciable land. On January 2nd, 2017, Bidun PLC acquired 80% of the equity share capital of Bidun PLC, when the retained earnings of Bidun PLC were 212 million naira. Other reserves were 40 million naira. The fair value of a 20% holding of the non-controlling interest was 144 million naira. A 30% holding were 216 million naira, and a 44% holding was 322 million naira. At the date of acquisition, the identifiable net asset of Bidun PLC had a fair value of 724 million naira, and the excess in the fair value was as a result of non-depreciable land. Both by Norman Figure number 3, both Bidun PLC and Yedun PLC were tested for impairment at December 31, 2018. The recoverable amount of both cash of generating unit as stated in the individual financial statement as at December 31, 2018 were Bidun PLC 2,850 million naira and Yedun PLC 1,208 million naira respectively. The directors of MIA PLC felt that any impairment of asset was due to the poor performance of the intangible asset. Number 4, MIA PLC acquired trademarks of 20 million naira to use in a project to develop new product on January 2nd, 2017. MIA PLC incurred additional cost of 14 million naira on investigation and has determined that the product can be developed. A working prototype was created at the cost of 8 million naira, and in order to put the product into condition for sale, a further 6 million naira was spent. Finally, marketing costs of 4 million naira were incurred. All the foregoing costs are included in the intangible asset of MIA PLC. Number 5, MIA PLC intend to dispose of a major line of the parent's business operation. At the date the sale criteria were met, the carrying amount of the assets and liabilities comprising the line of business were as follows: property, plant and equipment, 98 million naira. Inventory, 36 million naira. Foreign liabilities, 6 million. It is anticipated that MIA PLC realized 60 million for the business. No adjustment have been made in the financial statement in relation to the above decision. Required. Prepare the
consolidated statement of financial position of MIA PLC Group as at December 31st, 2018. At least let me help you with that one. Thank you so much. It's not easy doing that lengthy reading. But as you were reading the question, let me ask again, as you were reading the question, what was coming to your mind? Were you able to make sense of the question? As I was reading it, were you able to say, oh, this is what they asked us to do. This one is simple. Oh, this one I will do it. Tell me what was coming through, what was going through your mind.
Hello. Hello.
Hello, Folashade.
Please, I don't know the question, the year or date, the question you are reading. Please, can you help me out?
It's in the group.
It's in the group. Okay. Thank you.
You're welcome. For those who were following the question, what was going through your mind? Were you able to say, okay, these are some of the things I know, okay, or what was going through your mind?
So the question seems very complex, different from the one we've been solving.
It's okay. Complex, that's one view. Any other person? Okay, others are indifferent. Based on the question, what are the standards you think that the examiner is testing here? Because the examiner is testing some standards. You'd have seen some evidence or some standards here. Which one have you seen? Which one have you noticed?
I've seen non-current asset held for sale.
You've seen non-current asset held for sale and discontinued operation. That's additional information. What? Additional information 5. Okay. Right. Which one have you seen again? There's IS 38. Intangible
IS
asset.
38.
Additional information 4. That's IS 38 intangible asset. Additional information 3. It's what? Additional information 3 is impairment. Cash generating unit, CGU. That's what is in that question. The only thing that is group related is additional information 1 and 2. So nothing is complex there. Additional information 1 and 2 only. That's why you can say these are actually group. Additional information 1 is the regular thing you do. Additional information 2 is even our focus, because this is the one we are talking of, a subsidiary. Are you with me? It's additional information 2 that is even our business of the day. Additional information 1 is our regular routine. Additional information 3 is cash generating unit IS 36. Additional information 4 is IS 38. And additional information 5 is IFRS 5. So the examiner has only tested standards in this question. Are we together? So this is where you will know either you are on your own or you are with God. But please be with the two. Be with yourself and be with God. So let's start. I hope you can see what my screen. I've shared my screen. I've started writing. So we have MIA PLC, right? Acquiring 2 companies, right? Anyway, he acquires which company? Bido, right? Bido PLC. That is 70%, right?
Yes.
Which means in this case, we have NCI at how many percent?
30%.
Okay.
30%.
Then, so what's the relationship of with to MIA PLC? Because I think it wasn't MIA PLC that acquired Yedun. It was Bido, right? This one now,
Yes.
It acquired which company? Yedun, right?
Yes.
So when Bidun acquired Yedun, how many percentage? 80 what? Percent.
80%.
The NCI here will be what? 20%. But who are we representing?
Me.
We are representing Miye, right? So who is preparing the group? Miye, right? We are preparing the group account for Miye. Now, it means that if let me put it this way. If I'm marrying my wife and my wife born pikin, who owns the pikin?
You.
You.
Me, Abi. Good. So if I own 70% of a company and the company goes ahead to own 80%, it means that I also own what? I still own my 70% in the company that my subsidiary went to acquire.
Yes.
Does it make any sense? So the meaning is that in anything Bidun does, my 70% interest is always what? There. In anything Bidun what does. Are we together? So it therefore means that yes, Bidun is my subsidiary, but this will be my what? Subsidiary. Okay?
Yes.
But do I own 80% of it? No. I can only claim what? A 70% of what? 80%. Who will claim the remaining outstanding balance of 30%? NCI. Are you getting me?
Yes.
Because in Bidun, I did not own Bidun 100%. I only own 70%. NCI owns what? 30%. How the 30% will go and account for theirs, that's their problem. Mine is to account for what? My 70%. Are we together in Yedun? So let's now move here by saying Yedun PLC. What is 70% of 80? So that I want to
56%.
56%.
Yes.
Are we together? 56%. So it means that what I have in Yedun is what? 56%. Okay. And if I have 56%, do I still have control?
Yes.
Yes.
Yes. So indirectly, I still control what? Yedun. The part I do not control in Yedun will now be how many
44%.
percent?
44%.
44%.
That is what? 44%. Up until this moment, are we together?
Very together, very well.
Now, if let's say I own 40% in Yedun as a subsidiary, it means that I cannot consolidate Yedun. Are we together? Yedun, if I own less than 50%, that's what I mean. In Yedun, it means that Yedun PLC is what to me?
Associate.
An associate. And how do we treat associate?
You will not consolidate the assets.
Talk like a chartered accountant.
Equity method.
We apply the equity method. Oh, they never give you a CA title. By the power bestowed upon me, you can be called ACA. We use what? The equity method. Are we together?
Yes, sir.
Good. So that's which you need to know on this. This is the only part that is interesting there. Every other thing, let us just while away time. Let's move forward. So let's go to additional information 1. Can a feminine voice do the reading for us? That additional information 1.
On January 2, 2016, NIA PLC acquired 70% of the equity share capital of Bidun PLC when the retained earnings of Bidun PLC were 638 million naira and other reserves were 54 million naira. At acquisition, the fair value of the non-controlling interest in Bidun PLC was 590 million naira, and the fair value of the identifiable net asset acquired was 1,670 million naira. The excess in fair value was as a result of non-depreciable land.
Okay. All right, good. Okay. Okay. I think this question is quite different in one sense. If you go to your statement of financial position, you have OSC, you have other reserves, and you have what? Retained earnings. All right, interesting. I'll show you where. Not different, Sha. If you do it the way I do it before, it's not a problem, but I'll have to show you. You only miss maybe 1 or 2 marks. Other reserves, retained what? Earnings. So at acquisition, what was our OSC?
800.
Wow. Zoom has changed their pattern, and it makes sense. They are not putting it by the side. That makes sense. 800, right?
Yes.
Okay. All right.
The 800 is that, okay, it's the same.
Let me put my Naira sign. Please always put those things there. It matters a lot though. You can just put Naira sign and you can go and submit. Don't worry. At acquisition, okay, let me just do the reporting date once and for all as I'm open there. All right, at acquisition date, what was the other reserves?
54.
Retained earnings was 638, right?
Yes.
But we are told that the fair value of the identifiable net asset in total is how much? 1,670,000. So the fair value adjustment is the what?
Land.
Or the difference is the fair value adjustment, which is land. Examiner was so nice to tell us that it's non-depreciable. So what's the difference? That should be 178, right?
1032.
I've gotten 178 though.
Yeah, it's 178.
Okay, because I'm also trying to calculate from here. So in total is 1936. All right. You know, normally when I do the post-acquisition retained earnings, I'll just write the difference here, right? I hope you do remember. But this time around, I will not. I want to separate it here because these two are separated on the face of the financial statement. Are you with me? So I need to add the difference of reserves to reserves and the difference to retained earnings. And you get the share of each. It's still the same thing, only that I'm splitting it between retained earnings and other reserves. That's all. This is 20, and this is what?
246.
246. The difference is still the same thing, but for clarity's sake, so that we will not lose 1 mark or 2. It's just 1 mark or 2, but that 1 mark or 2 is highly important. Are you with me? Up until this level, any question? We are just doing the same thing we do normally. So let's look at the goodwill for Miye. And for which one? Bidun, right? So what is the parent consideration? Parent purchase consideration, how much?
1460.
You say?
1460.
Okay, I was even looking for it. Where did you see it though? It's in the statement of financial position.
Yeah.
Yes.
NCI, what's NCI?
NCI is the question, application commission 1. 590.
590.
Why are you using 590?
Because the fair value of non-controlling interest is
why not
590.
30% of 1670? Why 590?
Because
I think
NCI was
giving the at fair value, we use it.
because NCI was, they did not say for Miye, the entire entity, was specifically for NCI.
I don't agree.
Why?
I said the policy.
Because NCI is measured at fair value.
Thank you. The question says, is the policy of Miye Group to recognize NCI at what? Fair value. Please note that statement very well because it might be useful. It's the policy. Are you with me?
Yes, sir.
Please, I have a question.
Go ahead.
Yeah, so if we are not told that it is a policy, maybe
then
they
use
say
the fair value. Use the fair value. But as much as this question is concerned, you were told, so that should have been the answer.
Okay, sir.
Because if you are asked to justify why, it's like when you're asked to defend your case now. If you go to court and you're asked to defend case, you defend your case based on the evidences and the pleadings you've submitted, not based on what is on social media. So don't defend by what you think you know. Defend by what is in the question.
It's okay, sir.
You get it?
Yes, sir.
And if you don't get it,
forget it.
So, is it possible they give you the fair value of NCI and still ask you to use proportionate share?
yeah, if they'll tell you the policy of the organization. They'll tell you that's the policy of the organization. And if you are told you have no option,
That's going to use the policy.
yeah.
We are going to ignore the NCI at fair value.
Exactly. I'm going to use the policy.
Okay, sir.
But you said if we are not told, then we use the fair value.
Exactly.
But
if sorry,
sometimes, told, can I ask something?
Go ahead, please.
Sometimes they might be silent in the question. Are we to like use proportionate share in that aspect?
If the examiner gives you the fair value, use the fair value.
If they are silent, they're not saying anything about NCI.
No, if the examiner is not saying anything about NCI, it means that it will not give you the fair value. Then you use the proportionate.
Okay, thank you.
Thank
you. Are you getting? The moment the examiner says the fair value of the NCI, it means it's not silent. But the examiner can give you the fair value of the NCI because that one you cannot calculate it yourself. Okay. The examiner can give you the fair value of the NCI and still tell you that the group policy is to use the proportionate share. You go ahead and use the proportionate what? Share of net asset. Are you with me? All right. So how much is here? 380.
Yeah.
Goodwill at what?
At 08.
acquisition. I know there's something like impairment there, but maybe before we get there, we'll look at its NCI, okay? Most of these workings, I'll keep them open so that when Bidon comes in, we do the same thing for it, all right? NCI so it'll be at fair value. What's NCI at fair value?
590.
590. So what do we add to it? We add the share of retained earnings and the share of reserve. Are you getting me? Okay. But I've chosen to just split the two because they are separately treated in the equity. But for NCI, they are going in as a full item. Are we together? So that's 266. Anyway, I can split it. I can just do it. NCI, no wala. So that's what? 30% times what? 266. What would that give me? 79.8. So let me keep this open for now, okay? I don't know what I may need to put in there, all right? Now let's go to additional information 2. A masculine voice should help us. A masculine voice.
Can you give the NCI calculation?
Additional information 2.
On January 2, 2017, Bidu PLC acquired 80% of the equity share capital of Yedon PLC when the retained earnings of Yedon PLC were 212 million naira and other reserves were 40 million naira. The fair value of a 20% holding of the non-controlling interest was 144 million naira. A 30% holding were 216 million, and a 44% holding was 322 million naira. At the date of acquisition, the identifiable net assets of Yedun PLC had a fair value of 724 million naira, and the excess in fair value was as a result of non-depreciable land.
Okay. All right. Now, so going back to Yedo is a subsidiary to me, right?
Yes.
So let's go ahead. Let me do the subsidiary net asset schedule. This is Yedo PLC at acquisition, at reporting, and then what? Post acquisition, retained what? Earnings. Are we together? So we are what's the OSC position? What's the other reserves and the retained earnings? Are you with me?
400.
So what's the 400, right?
Yes.
This is 50. It's 278. And then other reserves at acquisition were 40 million. Retained earnings were what? We have free adjustment, which is due to land. So everything in total, we are told is 724 at acquisition. 724 minus 440 minus 212. That gives us what? 72. We're told it's a land that is non-depreciable. What's the total for this one? 72 plus 278 plus 450. That gives us what? 800. No be so. Then 278 minus 212 gives us what? 66. 800 minus 724. Are you with me?
Yeah.
Now let's go to the goodwill. Now let's start. Are we together? And please see what I'm going to do. Okay. How much was the purchase consideration by the parent?
640.
How you get me? 640, right? But this 640, this 640, right? What's the percentage that belongs to me?
56%.
No, of the 640, listen, no, of the 640 that be paid, what's the percentage that I own? Me?
80%.
86%.
Hold on, no. Let me.
70%.
You want to do a joro for me there. Let me see who is talking. No, one by one.
70%.
Eh?
70%. The question. Is it the parent or the
in this
grandparent?
this 640, you know it was Bidun that paid, right?
Yes.
But me, I'm representing Miye PLC.
Yes.
So I'm now asking, for Miye PLC, how many percent actually belongs to him?
56%.
Okay, somebody said 56,
80%.
somebody said 70, somebody said 80. All right. If you say 56, why?
I said 56 because percentage of Miye in Yejun, which is the Miye is the parent. We are talking of the parent now, is 56%. This is why I said 50%.
Okay.
I said 10%.
Eh?
Because your question is what
You said how many percent?
I said 70% because your question was the percentage of Yedu, not in Yedu. So 270.
Okay. And the person who said 80.
Okay. I said 56.
Anybody? I need somebody else who said 80. 80 is thinking. Anyway, it is 70%.
70%.
I controlled, it is Bidun that acquired, okay? It means that anything that Bidun does, I have what? Anything Bidun does, I have 70% stake. And my NCI has what? 30%. Are you with me?
Yes.
I have 70% stake. And NCI has what? 30 what? Percent. As much as this case is concerned, what I'm interested in is my percentage interest in Yedun. Are you getting me? So if Bidun has paid 640 million, which is good for him, I know what I only need is to take what? My 70%. Are you with me?
Yes.
I need to take away my what? 70%. Now, it means that I can less NCI, are you getting me, in Bidun, which is what? 30% of what? Of 640. I could have done 70% straight away, but I want to show you something. You might understand the concept and it might be confusing. So I need to take out 30% of what? 640. Somebody may go and make a mistake and look at Achina information 2. The fair value of a 20% holding of NCI was 144. A 30% holding were what? That Achina information gave you 30% what? Holding.
What? 16 and 44% was 322.
Good. But that will not be the option for us. Why? Bidun is declaring that it is Bidun that is declaring now. If I own a company, okay, the fair value, if it's a 20%, this is the value. If it is 30%, this is the value. If it is 44%, this is what? The value. But we are not looking for the value that Bidun is declaring. We are looking for the value that Miye, are you getting me? Is declaring. We are representing who? Miye. We are not representing what? Are we together?
Yes.
So for hence our own interest, it is only the 70%. So if you've taken your 70%, you are fine. Are we together? I just want to show you so that some don't say, oh, but this 30%, why not use it to less it? Are you getting me? Maybe if you check the solution there, this is what you will see they will do. If I'm the one in the exam, I only take my 70% and I don't go. Let me solve question. No time to waste. Are you getting me? Hello?
Yes, we are.
So let me just do my 70% and I'm out. All right? I think I've always told you my own approach to solving questions. It's time. I work with time. Time.
But won't you, if doing purchase consideration of 640 and lessening STI of Bidun by 30% of 640, would it have additional mark than just writing the 70% straight?
You know that's where the dilemma stands, because you really cannot say what are the options the examiner will award point to. So it can just be as explicit as much as possible. Are you with me?
Yes, sir.
You can be explicit as much as possible because you cannot predetermine which point will constitute mark for the what? For the examiner. But I'd rather tell somebody, it's better you shall know that you've attempted all questions first and you are guaranteed that you will pass before you start pursuing additional mark to win prizes. You get my point?
Yes, sir.
All right. Anyway, for the sake of the person asking this question wants to win prize, let's do it. Less NCI in Miye. I think tonight I'm very slow with this question. No? Maybe because today is Sunday.
Sir, I have a question.
Question, you know they finish. Go ahead. Though.
Okay. The question is, let's say for instance that Bidun has a 60% holdings in Bidun.
Let's say I'm struggling hearing you.
Okay, I said for instance, if Bidun has 60% holdings in Yedin instead of 80.
Okay.
So are we still going to like take 70% of the 640?
If Bidun has 60%, right? I think I've answered that question. What would be the percentage of Miye in Yedun then?
60%.
What would then be the percentage of Miye in Yedun? That would be 42%. It's less than 50. So you cannot consolidate. That's an associate.
42%.
Yeah, it only goes and take 42% of his investment and then his share of retained earnings. That's all.
Okay. So if I get you right, we are using the 70% here because control is still retained, right? Like
exactly.
Control.
So you are computing goodwill because you are going to consolidate. Control is still there. If you do not have control, you cannot consolidate it.
Okay, thank you, sir.
You're welcome.
Please, sir, what let's say, please. Please, sir.
Go ahead. Ask.
Why do we let answer in here?
So that we have 70% of our investment.
But sir, the question is stated that if it is 30% NCI is 216.
What have I been explaining since? So
Is the network? The network is bad. Some of us connect. Is the network?
It's maybe in the network, sir.
Oh,
but it's in the question, 30% holding is 216.
That's what I've been explaining since. The 30% you have there, are you getting me? Is the 30% holding, or it is based on what Bidun, our subsidiary, uses in valuing NCI in its company. We are representing Miye PLC. Okay. We own Bidun 70%. NCI owns it what? NCI owns it at what? 30 what? Percent. 30%. Are we together? It therefore means that anything Bidun does, we have 70% stake, and NCI has what? 30% stake, right?
30.
In this case, Bidun has paid 640 million. It means that we must take our what? 70%, and NCI takes what? 30 what? Percent. But if Bidun goes to acquire any company, he is telling you, Bidun is saying, oh, mine, 30%, this is the value. 44%, this is the value. 20%, this is the value. That is not the value he will use to determine for the what? Parent. Are you with me?
Yes, sir.
How best can I explain it again? Okay.
Grandparents.
So let me use it this way. I'm the man. I don't marry my wife. B. My wife born Peking. Are you with me?
Yes, sir.
Can the wife determine the type of sperm we go enter am? No, she cannot. So my wife cannot be telling me, this is how you must value the sperm. It's not possible. It's the same thing. Bidun cannot go and tell me, this is the value of NCI for you. we are the one that own Bidun. Are we together?
Yes, sir.
Except if Miye is saying that 30% NCI in its company, this is the value. Okay.
Understand, sir.
But Bidun is saying 30% NCI in my company, this is the value. You have to just assume that this is because this is a question, okay? If you are an accountant in Miye, will you know what the value is? You are in your office now, you will not know. Does it make sense?
No.
Don't worry. Don't forget the 30%. Just take your 70%. That's the concept. I can include it for the sake of somebody want to earn extra mark. Should there be an extra mark? Are we together?
Yes,
so,
sir.
Note very well. This goodwill we are computing here, we are not computing it on behalf of Bidun. If we are computing it on behalf of Bidun, we'll be taking what?
30%.
80 and 20.
We'll be taking, we'll be using 80%, which we are computing it on behalf of what? Miye. Okay. We are computing it on behalf of what? Of who? Miye. So we need to note that very well. Are we together? We need to note that word very well. Okay? So, in essence, as soon as what the Miye was able to take its percentage of what? Control. Are we together? There is a part, because technically what we are just trying to do, how best can I explain it for you? What we are trying to do is let us bring out exactly what Miye, are you getting me? As in what? Yedun, are we together? Hello, are you with me?
Yes, sir.
We are trying to bring out what Miye has in Yedun, but Miye has investment in Yedun through Bidun, right?
Yes.
Are you with me?
Yes,
sir.
If you say you want to take, let me tell you, you want to take 56% of 640, most likely you've made a mistake because you do not own 56% of 640 that was paid by what? Bidun. You own how many percent? 70. Are you with me?
Yes.
Hello, are you with me?
Yes.
Yes, sir.
You actually own 70% of the 40. Okay? But you own 56% of who? Yedun. You own what? 56% of who? Yedun. Are we together? You own 56%, but for this 640, you own what? 70%. Are we together?
Yes, sir.
But now, when it comes to the NCI, how many percentage of NCI do you hold in Yedun?
44%.
Or how many percent of NCI belongs to Yedun that is not yours? 44 what? Percent. Are we together? 44%. Now, so in Yedun here, you have 44% that belongs to what? NCI. Okay. So what you are only doing is you are taking your portion. Okay. You are taking your what? Your portion. Because you need to remember that NCI that owns the remaining 30% here, okay, they will also prepare their record, recognizing the 30% which they own. in Yedun, okay? And then the 70% they do not own. So that's just the logic there. It's just to know that you are picking out your what? Your portion. Are we together in it? Now, we now go to what is the fair value of NCI that is in Yedun, okay, that you do not control. What's that fair value? It is at 44%. And
yes,
at this case, you will use the fair value method, the one you are given in the question. Because Bidun is telling you that, bros, 44% in this company does not belong to you. You said no, say it no belong to you. Are you getting it? And it has measured the 44% for you. Are you with me? Because the part that does not belong to you belongs to other person. But Bidun cannot tell me, a son cannot tell the father and the mother, say, no be you born me. Except for children of nowadays, yeah. Are you with me?
Yes, sir.
You cannot tell that no be you born me, okay? But you can tell them that, oh, bros, daddy and mommy, this is your own grandchild. Okay. Are you getting me? No, don't worry. Some of you are looking at what is the magic here. Maybe it's because I was explaining it at length. It makes it look like a big deal. Let's go, Gary. No big deal in what we have been doing. Smile and be happy. So, what do we have? 640 minus 192 plus 322.
770.
770.
So, what is the subsidiary fair value? What is it? We are even given the question now.
724.
724. And that gives us what? 46. Are we together? Are we together?
Yes, sir.
All right. Oh, this one, I'm tired like this.
So please, I'm lost though. How did we come about that 44%?
In the question.
And we arrived at 322. That's
It's
the
in the
value of
question.
NCI.
It's in the question.
Additional information too.
Additional information too. Are you getting me? Now let's do NCI. So, okay. I want to, so let me say this is our investment in Bidun. Okay. This is our investment in Yedun, right? So what's the fair value in Yedun is 322, okay? That we do not control. No be so.
Yes.
it is.
Then we have our share of par. That would be 76, right?
Yeah.
So that would be how many percentage? 44%. That's what we do not control, okay? Of 76. 44% of 76. That's what?
33.44.
33. Let me just use 33, Gary. Okay. So this one, let me use a full number. I don't 79 point, that will give us 80. All right. Up until this level, I'm sure, except for this, look, it's just because I chose to put this here. If I do not, and I tend to do that for the sake of class, okay, I will just take my 70% of this investment, put NCI fair value, and I'm out, okay? So this one is conditional, all right? The goal you must seek to achieve is to take your what? 70 what? Are you together?
Yes.
Every other thing in the question will be distraction. And look for the fair value of the one you do not control. That's all. That's the only thing you need, okay?
So please, when do we apply 56,000 that was completed in the group structure?
When do we what?
Apply the 56,000, 56% rather.
When do we apply the what? 56%? Don't worry,
Yeah.
let's get there. We just relax. Okay? Relax. You will see where we are going to apply it, okay?
All right.
Normally, when we solve goodwill, do we even look for percentage of parents? When we do goodwill, do we look for percentage of parents? We are always told the parent what? Purchase consideration, no be so? So this one that we are looking for percentage, why? Why are we looking for the percentage of the parent?
The subsidiary that acquired the sub-subsidiary.
Because it's a subsidiary that acquires the sub-subsidiary. So we're only looking for a percentage of interest in the sub-subsidiary. Let's move forward. What's the next additional information? Let's quickly see impairment if we have anything there. So now I want to start teaching you IS 36, so this is not group again. This question is over there. Additional information 3, somebody should do the reading, please. Additional information 3, can somebody do the reading? Additional information 3.
Both Bidun PLC and Yedun PLC were tested for impairment at December 31st, 2018. The recoverable amount of both cash generating units as stated in the individual financial statement at December 31st, 2018 were Bidun PLC 208 million and Yedun PLC 1,208 million, respectively. The directors of Media PLC felt that any impairment of assets was due to the poor performance of the intangible assets.
All right, so here we have cash generating unit, okay? An asset is said to be impaired when the recoverable amount is what?
It's lower than the carrying amount.
An asset is said to be impaired when the recoverable amount is what?
Higher than the carrying amount.
Sorry.
Okay, when the recoverable amount is higher. Is it that it's higher?
It is lower. When the recoverable amount is lower than the carrying amount
is lower than carrying amount.
It's okay. Yeah.
When the carrying amount is greater than the recoverable amount.
The excess of the carrying amount over the recoverable amount.
Yes, when carrying amount is higher than recoverable amount.
What's that masculine voice that is using grammar again? Yeah. People are battling higher and lower now. You're putting excess. All right, let's move ahead. An asset is set to have been impaired when the recoverable amount is lower than the carrying amount.
Yes.
So we have cash generating unit and we're given the recoverable what? Amount. Are we together? So let's go ahead. First, let's pick goodwill. What's the goodwill in Bidun? 380. And in Yedun it's 46, Abi. What is the value of the assets? This is 36 I'm doing. The total value of the assets in Bidun and Yedun 2260. And then 1190. Are we together? We have land. Remember, it is not included here, right?
Yes.
We have 178 and 72.
Is land an intangible asset?
Land is part of the total assets now, but they have not included it.
Okay.
So please, I want to know why you are using this selected item instead of using what maybe the assets that is given in the statement of financial position. Why are you using this one?
Why am I using what?
These items like goodwill, assets, like the adjustment you just made. Why are you using this one to compare it to get your impairment?
Which one do you want me to use?
I want to know why. Like I thought
I only pick assets in the question. That's all now. I want to compare the carrying amount of my assets with the recoverable amount. No be so. So you're saying, why am I using it? So I'm asking now, what should I use? Or how can I get the carrying amount if I do not add up the total assets? Hello?
Yeah, I'm here.
Yes, how will I get the assets now? I'm adding it up now. You say, why should I use it? So I want to know, what should I use?
She did not notice that is the total of the assets that you pick. Check the statement of financial position. He picked the total figure.
I only picked the total figure. Remember, this is working. This is not the answer. So if you start listing everything there.
Assets.
You said you picked the total. Meanwhile, fair value of land is not in the consolidated statement of financial position. So I'm now asking, why are you using these ones you've adjusted instead of what is being given in the statement of financial position?
Okay. So you're asking, why am I using land or why am I using what?
Yes, like land. Why are you using land? Why are you using it?
We are not consolidating. We are just doing workings now.
All right. Now let's go back to the question. When was it tested for impairment? It was tested for impairment on 31st December 2018.
Okay.
First, when we have started consolidating the company? In the case of Bintu, consolidation would have started, or when will consolidation start? The acquisition is what? Or the day control is what? Established. Are we together?
Yes.
And so the company already belongs to us. If we are to prepare the statement of financial position as at November 2018, are we not going to include land as part of the asset? Hello?
Yeah, I'm hearing you.
If you are to prepare the statement of financial position as at November 2018, won't we include land? Remember that this land we are talking about, we are talking of this acquisition in 2017, January. We are preparing the statement in 31st December 2018, right?
20.
Interesting. Only that we are told that this land has not been what? Included. So it ought to have been there, but it has not been there. We will put it there. All right, we'll blow the spirit to you so that I can understand the spirit of the gods. All right, this one is 1308. Are we together? So this is the carrying amount, okay? What's the recoverable amount?
2850.
Recoverable amount.
2850.
And this one is here, is what?
1208.
1208.
So, is there any impairment on Bidun?
No impairment.
No impairment. Is there impairment here?
Yes.
Impairment.
100.
100.
Okay. So, how will this impairment be? How will I put it? Be shared in CGU. What's the principle of allocating impairment in CGU?
You first eliminate goodwill.
Okay. So
Then
I can note it for you there. Are you getting me? If you want to prove to the examiner, you can discuss because it's testing IS 36, okay? Are you getting me? There's no impairment in Bidun PLC since the recoverable amount is greater than the what? Carrying amount. Are you getting me?
yes, sir.
There is impairment in Yedun by 100 million, and according to IS 36, impairment should first be allocated to what? First be allocated to
Goodwill.
goodwill. Followed by what? Assets with or significant or visible deterioration, damages. Let's just stop there. And in this question, we were given, right? We were told, okay? So thus, goodwill will be written off in this for Yedun, right?
Yes.
How much of goodwill will be written off?
Total of 46 million.
Be written off. And we are told in the question that the impairment is due to intangible what?
Assets.
Asset. So the balance of 54 million will be removed, or don't let me speak like an English person. The balance of 56 will be credited to intangible what? Are we together? So please note that information. It means that intangible asset will less by what? 56 million. Are we together? So we'll come here and say impairment. Goodwill, where is it? Right? Goodwill will be what? Impaired by what? 46. But now, what's the goodwill? Are you with me?
Yes, sir.
Are you with me?
Yes.
Yes, sir.
So, Okay. I want to check if the question is talking about the full goodwill method or who gets the goodwill. That's it. Okay. Don't worry, let's continue. If I'm able to trace that, I'll be able to see. But for now, I've not seen anything related to it. Now let's go ahead with the next part of the question. MIA PLC acquired what? Trademark. Okay. Of 20 million. Okay. In order to use in a project to develop new products on January 2, 2017. MIA PLC incurred additional cost of 14 million on investigation and has determined that the product can be what? Developed. All right. A working prototype was created at a cost of 8 million naira, and in order to put the production into a condition for sale, a further 6 million was spent. Finally, marketing cost of 4 million were incurred. All the foregoing costs are included in the intangible asset of who? MIA what? PLC.
Yes.
So we are told that MIA PLC has included all these costs. Not be so. But let's ask ourselves a question. All these costs you are saying, should all of the costs be capitalized?
No.
No, right? Why?
Yeah. According to IAS 38.
So,
hello,
IAS 38 talks about research and development costs, right?
Hello, sir.
Hello, go ahead.
Sorry for disturbing. Please, can you share the link after the lecture? Because I'm running out of data, please.
Noted. Let me calm my mind. Noted.
All right, thank you.
Because there's never been a time that we don't share the link. So starting the class for us to share the link now is like,
no,
wow.
Not now. After the lecture, please.
Don't worry. We always share link after every lecture.
All right.
Don't worry.
Thank you.
Relax.
Yeah.
All right. So we talk of research and development costs. Are we together? And IAS 38 states that all research costs should be what? Or is it should or must?
All research costs should be expense.
All research costs must be what? Expense. It must. It's not a probability. It must be what? Expense. But development costs, what should happen development costs?
Capitalized.
Under certain conditions.
So development costs may be capitalized. What are the conditions that need to be met? Right from my ICANN days, this is our formula. MIA-T criteria. I think I cannot forget that thing. Cost must be measurable. Ability to use. Technical feasibility. Intention to sell or use. What is EO? I forgot it now.
What's that? Let's start from you.
I've only told you the criteria there. That's all. Those conditions. So now let's look at the ones that need to be capitalized and the ones that need to be expense. Which ones should be capitalized? The acquired trademark, right?
Yes.
That's what 20. Right?
Yes.
Good. MIA incurred additional cost of 14 million on investigation. Should it be capitalized or expense?
Capitalized.
Yes. Some cost.
Expense.
Expense, because it was after the investigation that the development phase started.
Yes.
That was when he knew that he could develop. So anything he was doing before the development phase, they are what? Research, all right? A working prototype was created at a cost of 8 million. Is it capitalized or expense?
Capitalized. Capitalized.
It should be what? Capitalized. Are we together? Good. So the prototype cost, we can capitalize it.
Yes.
And we are told that additional cost was incurred and in order to put the product into a condition for sale. A further 6 million was what? Spent. Capitalized or expense?
Capitalized.
Capitalized. When the development phase has started, any other thing they are doing to put it to its use or sale, it's part of the cost. It's part of the asset. Cost. Finally, marketing cost of 4 million were incurred. Capitalized or expense?
Expense.
Expense. So it means that 18 million should not have been capitalized, right?
Yes.
But it was capitalized. What ought to have been capitalized is what? 34. Are we together?
Yes.
So we can find our intangible assets, total intangible assets. We can quickly solve it here. What is MIA PLC, total intangible assets? That's 396.
396.
What of Bidun PLC?
60.
What of Yidun?
70.
70. But
yes,
it is the one for who did we just analyze now? We just analyze. Okay, it was Miye, right?
Yeah.
But we are saying that out of this expense, Miye ought not to have capitalized how much?
18
million.
He ought not have. And do not forget, we have one word, impairment, right?
Impairment. Yeah.
Yes.
Of how much?
56.
54.
Is it 54, 56, 54 now?
54.
Okay. Sorry, should 54 is 46. Okay. Oh, let me be careful with this one. So that gives us how much? Minus 18 minus 54. That gives us 454, right? Are we together? Are we together? Up to this moment, any question? Up to this moment, any question?
The only question I have, sir.
Okay.
Is like I'm always afraid that if I see something like this in the exam, how am I sure I'm going to do it?
The only answer I can give to you is be confident. Are you with me?
Yes, sir.
That's the only answer I can give to you. That you need to be what?
Confident.
Confident. That's all. I don't think there's any other answer I can give beyond that. Than for you to be what? Confident. That's all. So All right. Let's go to the next additional information. MIA PLC intends to do what?
To dispose of a major line of the parent business operations at the date of sale criteria were met. The carrying amount of the asset and liability comprising the line of business were as follows. PPE, inventory, current liability. It's anticipated that MIA PLC will realize 60 million for the business. No adjustment has been made in the financial statement in relation to the above decision.
So for the disposal group, we have 98, right? Inventory, we have what? 36.
32.
Are we together? And we have liability, current liability, right?
Of 6.
How much? 6, right?
Yes.
Because it met the requirement of in accordance with IFRS 5, right? So what do we have here? In total, we have what?
128.
28, right?
Yes.
That's the net balance. Or you can call future proceeds. But what's the recoverable amount? How much can be recovered from it?
50 million.
60 million. It therefore means that there will be an impairment loss of how much?
68.
68.
Yes.
Are we together?
Yes, sir.
So impairment loss of what? 68. So you know that it will be shown as a single, all this will be shown as a single item in the statement of financial what? Position. This one will go to retained earnings. Okay? It affects the parent only. Maybe so.
Yes.
The assets, what will come on the assets? In the asset side, you will have what? 98 plus 36. Okay? Minus what? 68. Impairment. Are you together? And then the liability will be how much?
6.
Will be 6 million. This will give us what? 98 plus 36 minus 68. This will give us what? 66 million. Are we together?
Yeah.
And remember that we are going to deduct this asset from the PPE, okay? Because we are taking it out. Are we together?
Yes.
We'll be debiting PPE by 90. No, we'll credit PPE by 98. Credit inventory by what? 36, right? Debit liability by 6. No be so?
No, sir.
Yes. And then retained earnings will debit retained earnings by how much?
68.
68. No be so? Then now debit disposal group asset by how much? 66. And then we credit disposal group liability by how much? By 6. If you add everything together, it should give you the same thing. I've only shown you the double entry. Let me do it well. You credit 98 and then what? 36. 98 plus 36 plus 6. What will it give you?
That's 140.
140.
140.
6 plus 68 plus 66. What will it give you?
140, none.
I'm sure that person who was feeling speaking from Ile.
Yes.
149. Really. All right. So is it 140? Are we together?
Yes.
All right. Is there any other additional formation. Okay, we've not treated retained earnings. Okay, let's go to, so goodwill, we are writing off, okay? Goodwill will be what? Fully impaired. Are we together?
Your acronym, why your acronym? You did not tell us.
Which one?
The acronym of
criteria.
It's for the criteria now. Cost should be measured reliably. Cost measured reliably. Is E, I'm trying to remember. Ability to sell.
You said ability to sell, okay.
Technical feasibility.
Existence. For development, for research cost. Ability to use.
Intention to use.
Existence.
It's the existence of market, yeah. Existence of market. That's all. That's my own short code since 2015. MEAT criteria.
Technical
feasibility.
The T is what? Technical
feasibility.
Okay.
Intention to sell.
Yeah.
Are we to use?
Sell.
To use.
Intention to use or sell. Anyone.
Okay, or sell. Okay.
I like acronyms so much. That's why I wanted to know. Thank you.
Good. So how do we treat impairments loss on goodwill on Yedron PLC? So how will it be treated? Let me hear your thoughts.
How will what?
How are we treating the impairment loss?
It will be shared between the parents and the NCI.
Since the policy of
Since the policy it should be shared between the parents and the NCI.
Yeah, I didn't get you.
How do we treat impairment or Yedron? You know, Yedron has impaired, right? By 46, right?
Yes.
Okay. So how is it going to be treated?
56% of it will go to the parents, like as a loss, then the other 44 to the NCI.
Okay. Any other thoughts?
Why are we sharing it? Why are we sharing it, sir?
So I'm asking that question too, based on what you've known before.
I think, like, since the policy is measure like full goodwill, whatever, like fair value is given, so I think they both have to share the loss, the impairment.
Okay.
Some percentage will go to the parents, then the other will go to the NCI.
Okay. All right. So let's do that. So we look at the impairment loss, all right? Which is 46, bringing it to 0, right? So here we have impairment, right? How many percentage?
44.
Of what? 46, right?
Yes.
What do we have? $20.24, right?
Yes, 20.
We'll take it out, that's negative. So I think one thing we've not solved is the parent retained earnings now. We go and close everything there, all right? The parent what? Retained earnings. All right. It's like a lot of us did not join class today. Is it that we don't have light? I think that is general. What's the parent retained earnings as per question? How much? Parent retained earnings as per question?
1790.
1790.
1790. All right, so we go to post acquisition. Retained earnings. For Bidun, we own 70%. For Yedun, we own what? 56 what? Percent. For Bidun, how much? We are going to use this, okay? Because this other reserve was treated what? Separately. Are we together? I only did this for NCI, use everything, because NCI, we don't care either it is other reserve. They should go and do it in their complaint. Are we together? So this is 246 and 66. 246 and then what? 66. Okay. What else? What else is coming to consolidated retained earnings? Intangible assets.
I have a question.
Okay, hold on. Don't worry. Don't forget the question. Hold it. Intangible assets. Are we together? That needs to be expensed. How much? 18, right?
Yes.
We have impairment loss.
Yes.
That would be what? 56% of how much?
68.
Of 46. Are we together?
Hello, sir.
56. Hello.
Hello, sir.
Yeah.
Yes, sir. I think that 46 is goodwill we realize in this Baidun. So
yes.
the impairment we have for the cash generation ISN is 100, so it should be 50% of 100. Just check
let's
it.
check. Let's
yes.
check. Hold on. What's the impairment is 100.
Yes, sir.
That's true.
And then that 46 is goodwill. Yeah.
Yes. So goodwill, because we need to treat the outstanding balance here. Thank you for calling my attention to that. Please, do you get what you just mentioned now?
I don't get it, sir.
The impairment in Yedun is not just the 46. It is what?
100.
100. I mean, I was just, but it is what? 100.
I thought you less the goodwill of 46 from it, making.
And how was it shared? How was it shared? 46 is goodwill, right? 56 is what?
54.
Intangible what? Assets. Are we together? 54. It's intangible assets. Are we together? Are you with me? And don't forget that this 54, we have even removed it under intangible assets. Can you see it?
Yes.
So the double side of it must affect what? Retained earnings and NCI. Do we get it?
Okay.
Hence, it will not balance. That's the meaning. The double entry is not complete. Because we are only treating the 46. We've not done the second leg of the what? 54. Adequacy side. So by the time, if let's say we continue like that without him calling our attention to it, we'll find the difference of what? 54. Thank you so much. If let's say you are close to me here now, I'll buy fish for you. We are far away. At least it means that you are following me. So that the lady will not say that men is supporting men. You wanted to ask a question. Please go ahead.
Okay,
a lady that want... Okay.
You
go
said
ahead.
something about other reserves that is being considered in the non-controlling interest.
Don't worry. I'll do it now. Don't worry. You don't run before your time. Relax. I mentioned that I did not pick this balancing figure for the parent. Are you getting me? Because as per question, they classified other reserves separately. Are we together?
Yes.
It's like if you are solving a question and they give you OSC and share premium. What do you need to do? You have to split it in between what OSC and what share premium. Okay?
Yeah.
If you pick 266 and put it under retained earning, you are still going to get the same answer. The only thing is that you have put the value of other reserve under what retained earnings. That's just it. But it's not getting the same answer. It is doing the right posting. You hear?
Yes, sir.
What's the impairment loss on the disposal group? Impairment loss on the disposal?
68.
68. Okay. So can somebody give me figure? 70% of 246.
172.2.
170. 56% of 66. That should be 36.96. That's 37. That gives me a total figure of how much? I know I took my time with this question because I want to explain the concept very well. 1857. Are we together?
Yes, 1857.
Then I can come and do what? Other what? Reserves. As per question, what is other reserves for me?
146.
146. So we do our post-acquisition reserves. For Bidun, that will be what? 70%. For Yedun, the way I can be calling the name safe. If someone is not careful, you'll be focused on the name instead on the question. So this is 20 for Bidun, and this is 10 for Yedun. 2010. Are we together? 70% of 20, that's 7 times 2 is 14. 56 of 10, that should give us about 5.6 approximately. All right?
Yes.
That's 20 plus 146, that gives us what? 166. So to the lady asking the question, you could see the only thing I did here. So you have to classify where they belong. That's all. Instead of using the word, the total. I want to believe that we have used any information that is reasonable in this question. Are you with me?
Did you eventually close the NCI for Bidun?
Yeah, let's go and close NCI.
Goodwill.
Yes, yeah, it has closed for Yedun. So NCI here, let's close. Let's close. 322 plus 33 minus 44, that's 311. Another person who is following us, what's the value for the first one? 9 plus 8 should give us 17. 9 times 2 is 18. So we have 670.
Hello, sir.
But sorry, sir. As we share this other component of equity, are we not going to also calculate for the NCI? Because we only take the. Are we? I don't know.
As we share which one?
That's the other component of equity. Yeah, other reserve we only take for the parent company. What about the NCI?
We've already computed NCI. Or we have not. The only thing I want to check to be sure we've computed the NCI. Okay, don't worry. I know the one I need to check. Because I know that, okay, I hope we've not made. Okay, let me explain this for you. Are you with me?
Yes, sir.
Okay, I will. We did. Some of the time when I just use, okay. All right, good. This 266 here, okay? Are you with me?
Yes, sir.
Yes. The 20 is included. Okay.
This is it here.
Yes, sir.
20 plus 246.
Okay.
We are not preparing the book of NCI. NCI will only come in as a what? One line item.
Okay.
Are we together?
Yes, sir.
NCI will only come in as a what? One line item. Okay. That's why it is there.
Okay.
Look at these two.
Yes,
10
sir.
plus 16, that's 76.
76, yes, sir.
Okay. That's it here, 76. Can you see it?
Yes, sir.
Okay. There's only one adjustment we ought to do on NCI, which we have not done.
Okay.
And that's it. And I think maybe your question actually brought my mind back to it.
Okay.
Now let's go to how much is, let's go to, that's the last adjustment we have. Good.
Okay.
Parent consideration is how much? 1460.
Yes, sir.
We know that NCI here is what? 590, right? Good.
Yes, sir.
Now, in this value, we've picked this 322. Are we together?
Yes, sir.
We ought to also come and adjust for this what?
192.
The second leg of it is coming to what? NCI.
Okay.
Are we together?
Okay, that's the 70% of 640, Abby.
It's 30% of 640. The second leg.
Okay, yes.
Look, what works with balancing account is the principle of double what?
Entry.
Anywhere you are removing, you must be looking for where the what? The other side is going. The principle of double entry. That's it. So even as I'm solving, I'm checking. Anywhere I've done positive, I'm looking for the what? Negative. Where is it? It must affect somewhere. So if you come, you remove 193 from here, 192 from assets here for you to be able to get your goodwill. It must affect somewhere. It's coming back to your NCI. Okay? Here don't purchase what? Consideration. And it's going to affect year to year, which is how much? 190 what? 192. So this gives us normally 670, and this will give us what? 322 plus 33 minus 44 minus 192. That gives us what?
119.
So the total will give us how much? 789. Is there any information you think we've not used though? I hope we have used everything. That's one thing about group or publish. What we call publish Akada S1. It's just double entry. Consolidated statement of financial position. Answer. The only new thing I taught you is the additional information too. Apart from that, every other thing, they can set it as a standalone question. All right. Let's go ahead now and consolidate.
You don't even ask whether there is a question at this junction. You used to have. You used to have whether there is a question at this junction.
Oh.
It's like some people are already trimming the way I say it. Or maybe you are watching the video mostly. So most likely, I don't know. Maybe I ask it subconsciously anyway. All right. Is there any question at this juncture?
My question is that I'm confused about the impairment of that 100 naira. You kept using it here and there, 44%. Sometimes you lose
but
it
this is
again.
now 100. How much is impairment on you?
It's 100, sir.
It's 100.
With the parent and then the that's all.
Going to the impairment of cash generating unit, you remove you wrote a note for us that time. You remove the 46. You remove 54.
The note here talks about how we allocate it. Of our 100 first, goodwill, right?
Yeah.
Out of the 146 will be goodwill. And then intangible asset is what?
It's 54.
Don't worry. So that you cannot understand. You cannot come here and say impairment of Yetun goodwill. Okay? Say 44% of
100.
Of 46. And then say intangible assets too. 44% of 56. You are still saying the same thing, or 54. It's still the same thing now.
Okay.
It only depends on how good you want to waste your time.
Okay.
This 100, or let me put it this way, if you use only 46 without using 54, what will be the double entry leg of this one? And don't forget, Yedun is also owned by two entities, the parent and who?
And the
NCI. So if Yedun has been impaired, the parent suffers, the NCI also what? Suffers. That's all. Regardless of what is impaired. What you do normally is goodwill impairment, Abi. And this examiner has taught to introduce what? Cash generating unit. Being impaired. Let me do like Pentecostal church for you. Receive understanding.
Amen. Fire.
I hope that one works.
Amen.
Because the way you catch it, it be like say you are receiving understanding. All right, let's go ahead. What's the PPE? 1936, right?
Plus 600.
Plus 600.
Plus 178.
178 plus 72 minus what?
98.
98. 98 is coming from where? Disposal group, right?
Yes.
Yes.
Goodwill, always add your working. So the only goodwill remaining is 380. How is goodwill for
the Bidun?
For Bidun, we have intangible assets. That would be about 4 something.
That's 454. Yeah.
454. This is it here. And then we have our value. We now go to current assets. Disposal group will come into. I hope you remember. Because it must be sold, it is believed it is sold within a year, it is reclassified under current what? Assets. Minus what? 36 inventory, right?
Yes.
Then we have what? The disposal group. It has its own workings. How much is the disposal group figure? That is 66, right? Anybody in spirit, can you give me figure for the property PPE?
PPE is 3,058.
Are you sure?
3058, yes.
1936 plus
3308. 3308.
plus 620. Now, so Adam trust woman.
3308.
Thank you, Gary. Let me support men. 3308. Current asset. Have you computed again to see that it's
3214. 3214 current asset.
Total asset here. 3308 plus 380. Plus 454. That gives me 4142. Add everything here together. Plus 3214 plus 66. That gives me 7422. Are we together? Equity and liability.
Well done, sir.
Thank you. I should have just 3 more classes with you. The one you did not learn, pray that it does not come out.
Amen.
And the one you learn, pray that when it comes out, you are able to solve it.
God grace.
Inshallah.
Amen.
That's 1840.
Retained earnings. Remember that if you have share premium, it means that they will give you the market what?
Price.
Price.
Yeah.
If you have share premium, they will give you what? The market price. And it's the market price you must use. Are you getting me? The market price of the parent or the subsidiary, which one are you going to use?
Of the parent.
The market price of the parents. Thank you. The moment you have share premium in the question, most likely they are giving you that. So just relax your mind. Why?
That's 1857.
Other reserves 166. You have your figure here at the total equity.
3863.
Then you have NCI. What's NCI? Sorry, 789. Now, we have non-current liability. What's non-current liability?
We have 990. And we have 186.
Okay, we have
1422.
We have current liabilities.
816.
816 plus
256.
276.
Minus
6.
Disposal group, right?
That's 1342.
That's what 1342. And then we bring the 6 here. Anybody with non-current liability figure? 990 plus 246 plus 186 1422. Anybody with the total equity?
3863.
3863. Hope you can trust the figure now, Abby.
Yes, sir.
Maybe not.
Oh, let me rub this off.
Yeah.
I like presenting it the way they're asking the question. The way it's presented, the way they arrange it also that way. Are you getting me?
Yes, sir.
Most likely that's the way they will mark it. Plus 6. This gives us what? 7422. I think it's the same thing now.
Yes, sir. All right.
Look, the moment you know how to apply double entry, are you getting me? Your account will balance. The only thing is that did it balance well or it balanced wrongly? Let me give you an instance. Are you getting me? You see this 100 that we are complaining, Abby? Are you with me? So let's say somebody went to use, even though they said impairment is 100, you went ahead to use only 46, you did not use 54. Are you getting me? But when you came to intangible assets here, you also did not include the 44. Your account will still what? Balanced, but you are not right. You have made an error. Are you getting me? What do we call that error?
Omission. Omission, error of omission.
I don't know, Sha.
Wrong principle.
I just asked. That is, you've made an error.
Error of double principle.
Because in journal entry, the error will not affect your account from balancing. Okay, it is not a one-sided because you omitted the two. What error we were about to make, but we quickly got ourselves. We've already removed this, but we were not subletting it from NCI and other categories. At the moment we do that, our account will
not balance. Why is it?
You say anything?
My account did not balance it.
Your account has not balanced it.
Yes.
It means that you've copied something different from what I had there. And we balance. Just watch the video again. Because it's still the same figure I've used here. Any question, anybody? Any question?
I don't know, sir. You say we have 3 class more, Abby?
Yes, I have. Let me stop